Hello Forex traders, this is Eric with the Forex point and figure system. If you want to learn more about point and figure charts in the Forex market and my system, visit fxpnf.com. Today I want to do a quick review on the Canadian dollar. It's a currency that I've been following pretty closely, one that I think could be dragged down if the US continues to slow down, and also the Bank of Canada slashing interest rates is adding some pressure to the Canadian dollar. However, the Canadian dollar enjoys this tremendous tailwind in the form of energy prices. Let's first take a look at crude oil. We're going to look at this on a point and figure chart. It's just really hard to be bearish at all on crude oil. Let's put that another way. Crude oil is going higher. It does so almost every day. And we're looking at this point and figure chart of crude oil. This is the continuous light sweet crude contract. It's the equivalent of what trades on the New York Mercantile Exchange. Bottom line, crude is going higher. It's going to get higher again today. It's cracking $120 per barrel. In the short term, judging by our point and figure chart here, I wouldn't be surprised to see it move up to maybe 125, 126, or even 127, which is the current bullish price objective. Let's also take a quick look at natural gas prices. Canada is a huge exporter of crude oil and natural gas. So as these two commodities go higher and they are in ever increasing demand, the Canadian dollar benefits. Natural gas, meanwhile, cracking above $11. Its bullish price objective based on this point and figure chart is $16.50. That's right up near its high that it hit back in late 2005. So both crude oil and natural gas looking really good. That's the tailwind that the Canadian dollar is enjoying. The headwind, meanwhile, is a slowing of the domestic economy dragged lower by the U.S., but also the specter of further rate cuts by the Bank of Canada. So we had these two dueling forces, the headwind and the tailwind on the Canadian dollar, that are leading the U.S. CAD to trade in this pretty tight range. We can see it trading just about at par or 1, but it hasn't been able to get above 102 or 103. So we're stuck in about a 200 to 300 pip range in the U.S. CAD, one that I think will continue to persist so long as energy prices remain high. But if we see any weakness that is a meaningful break in crude oil and natural gas, a breakdown lower, then the Canadian dollar should see an extended period of weakness. But until that happens, I would stick with trading the range, that is buying the US CAD on a pullback near support and then selling it near resistance. If you want to learn more about how to apply point and figure charts to your Forex trading, make sure to visit fxpnf.com.